Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
Good afternoon. We're doing it live right here, doing more at 4 in the afternoon, live on 790 KBC, right after Ben Shapiro, and right before the 790 KBC News Blitz with Randy Wang at 5. We've been doing more in 2024, and so has the stock market, hitting record highs. Yesterday, the market closed today for Good Friday. U.S. financial markets closed today for the holiday ahead of the Easter holiday weekend. The government today did release an important reading on the economy, a key reading on inflation, and it rose a bit more than expected last month, a jump of 2.8%. This is the PCE index, which we are told is the Fed's favorite inflation gauge. We also heard from the Fed chairman today. Fed Chairman Jerome Powell said there is no reason to think that the risks of a U.S. recession are elevated. He went on to say, in his words, there is no reason to think the economy is in a recession or the edge of one. He said he did not think that this view was controversial among economic forecasters. He went on to say we are at a place where the economy is strong, the labor market is at a good place. The Fed wants to use its interest rate tool, the Fed funds rate, in a way that keeps this strength, but also allows further progress against inflation, he added, saying we have a chance at that outcome. Well, we did see the first quarter of 2024 end the quarter rather nicely, with stocks ending the abbreviated week yesterday mostly higher. The Dow came in for a closing gain of 47 points, settling at a record high close, 39,807. The S&P 500 moved up 6, good enough for a record high close at 5,254. The Nasdaq pulled back 20 points at 16,379. The yield in the 10-year note settled in at 4.20%. Gold kissing record highs with a gain of more than $40 yesterday to $2,254.80 an ounce. We'll talk about the markets here shortly. Bitcoin has been recovering lately after the sell-off following its record high, back around $70,000. We'll talk about all this with our investment expert Brian Perry here coming up shortly. Also this hour, new calls for the repeal of the so-called Inflation Reduction Act. It turns out the Biden administration estimates show that the government could spend more than $1.8 trillion over the next 10 years on energy tax subsidies if they're made permanent. I'll talk about that and more with Adam Michel, tax policy director of the Cato Institute, who just wrote a big op-ed article on that subject. Fast food workers now losing their jobs here in California as a new minimum wage law is set to take effect on Monday, April 1st. No joke. Already Pizza Hut and Round Table Pizza have announced job cuts ahead of the state's minimum wage going up to $20 an hour on April 1st. I'll talk about that, and I'll talk about the restaurant business and more with the awesome Angela Marsden, owner of Pineapple Hill Saloon and Grill in Sherman Oaks, small business hero here in Southern California, and co-host of SOS Los Angeles, Family Food and the Little Guy at 1 p.m. Saturdays on your favorite station, 790 KBC. But first, on your money, the markets and the economy and the whole works today. Joining us now, investment expert Brian Perry, chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com. He's also the author of the 25% Cash Machine. Brian, thank you very much for taking the call here to wrap up the first quarter of 2024. It's been a big one. Give us your impressions of what we just experienced here.
Absolutely true, Frank. It was the best quarter in 5 years for the S&P 500 here, up 10% on the quarter here, and just very, very strong finish to a good start of the year. And the bullish narrative is still seen intact after today's inflation data, showing a cool down in the Fed's preferred gauge of inflation, which you mentioned. But it's also coupled with a rebound in household spending here, even over the short term. That's a nice blip. It's a nice bullish blip here because it's the longer-term trajectory for consumer discretionary spending has been lower here. Now, Jerome Powell was pleased to see the data coming in line with expectations, where the prior two reports, CPI and PPI, have come in, well above, not well above, but above both estimates there. So that's a pleasant surprise to the Fed to see that, and it bodes well for the market here going forward here as the week starts up next Monday. Really, we're at a point here where Also, what is called the supercore inflation rate, which is that's important because it strips out data that can distort the broader inflation picture. And a lot of economists like to look at what is called supercore inflation here. And today's read of 2.8% annual pace was surprisingly, it was notably lower than to the downside, which will keep the June cut in the cards, going forward here, as people wondering when the Fed might just, start their rate cutting campaign. So that's still on the table here. The trajectory, I said, for spending is starting to weaken a bit. We saw in disposable income here. So, and we saw that noted here in a couple names here, which are big kingpins in their sector here, and it's Lululemon and Nike, both of which guided softer guidance for the for the quarter ahead here. And that's where you see people they spend good amounts for premium products here, Nike, Lululemon, for instance. Whereas Home Depot, that's more of the the remodeling essentials and things like that. The stock is continuing to trade higher. So the discretionary spending for goodies and high-end products is starting to wane a bit, whereas the overall spending for services, and this is part of the where I said the supercore inflation tends to pay more attention to services, things like haircuts and fixing, getting the gardening around the house done with landscaping or plumbing and certain repairs, auto repairs, things like that. So that type of inflation is going to be sticky, but these other types of discretionary products are starting to see some price pressure. So that's good for the overall inflation picture, but it also means are these a canary in the coal mine for the consumer going forward here on an overall basis? We'll just see how that all plays out. And so this week here certainly marked by the departure of Boeing CEO Dave Calhoun. He's willing to step down by the end of 2024, and we talked, I think, last week about how the stock is trading higher and against a lot of negative news that came out. So obviously insiders knew that there was this change coming here, and it does argue well for the stock. Trades down here around 193, 175 is a very key support level for that stock. So if people want to look at Boeing here as where do I buy it here? It looks like a good place to enter the stock on the notion that they're going to bring in someone that's a 5-star CEO. And then using 175 is kind of a mental stop, so the downside is limited, but the upside is huge because the company has an enormous order book. If they bring it together, it's going to be a very good stock to own going into the end of the year and into 2025. Crude oil is up at 83, and that just means higher gas prices here as we start to get into the second quarter here. That's inflationary, obviously, but that's something that the core inflation strips out food and energy here because they are so whippy and volatile here. Gold hitting 22.38, another new all-time high, up $25 an ounce today alone. This is, again, I think a byproduct of the fact that the yen is hitting a 34-year low against the dollar, and it's going to probably involve some Bank of Japan intervention here. But we talked, a long time ago about how the debt to GDP ultimately is a hammer on your currency here, and Japan's debt to GDP is about 265%. The U.S. currently stands around 125 to 130%, depending on who you talk to. So it just shows that, ultimately, as the fourth largest economy in the world, the yen is under a lot of pressure right now. And a lot of that's being weighed down by the fact that they have this, this debt balloon over there that's just enormous pull on their GDP. So it's something to think about for people in the big macro world here. So, and then that also means, what does that mean for the euro also? Because of the same type of situation here. You have slowing economy. They're going to start to cut rates. That's never good for the cost of your money here, because the value of your money, because, when you don't pay as much, then your money tends to lose value if you're not, having enormous tax revenues over debt. And that's just that's the opposite of what's taking place there. So the euro is probably going to see some further weakening here, and the dollar probably holds up okay in this environment. And that's kind of where the week ended here. On some certain things are still out there. With we got earnings coming up here, starting in earnest here next week. Really, the second week of April is when things really kick into high gear. And expecting a very good first quarter earnings season in general. And it really, again, it's not about what you did; it's about what you think going forward here. So the forward guidance is going to be very pivotal to the bull trend, which is very much intact, Frank.
On the air live with money and investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Terrific assessment there, Brian. Let me ask you this: with the market at record highs here as we get set to kick off the second quarter, and have they pretty much shrugged off inflation concerns at this point, and are comfortable with the Fed signals on what the rate expectation is this year? What is the market seeing that people are still a lot of people are still nervous about?
Well, the higher for longer narrative. You still have a lot of economists out there that think that the Fed, and had former, Fed Governor Waller came out here midweek and said, we don't really need to cut rates anytime soon, and that kind of poured some cold water on last week's FOMC meeting where the dot plot plan came out and noted that 3 rates were still in store for the balance of 2024. So it ran counter to what last week's narrative was, and maybe there was a Fed just trying to temper the markets, their expectations always, what we call Fed speak, and it's a game that the Fed plays with the markets in order to just maintain, without getting too exuberant and valuations just, getting ahead of themselves here. So they're cautiously optimistic, and that's what the market loves, that cautiously optimistic. Don't want to be too out front of anything here, but I do think that the rate cuts are coming personally, and I think they will start in June based upon the super core rate today, and also some canaries in the coal mine about retail spending here coming back off a bit. And we'll see what the housing numbers look like here going forward too, because that's always a key indicator of whether rents are starting to plateau and start to come in as well. So the shelter index is a big part of inflation. So I like what I'm seeing here. It's a good setup for a higher market. Maybe another 5 to 10% here over the course of the next 3 to 6 months here, and then how you finish the year really depends upon a lot of things that fall into place with the presidential election here, and also the Fed's overall plan as to whether or not they're going to meet this objective of cutting rates 3 times. If this week here shows up fairly well, I think it will. You saw a light volume here this week here, and really kind of between now and earnings season, it's kind of the markets will probably trade sideways here with just trading off of economic news. But I do like the way the big names are holding up well here, not giving much back. And so therefore, especially the NASDAQ here, that looks like it's been sideways here. And all these new highs, Frank, they're very incremental new highs. There's 28 new highs for the year, but in terms of, over 10% move, that's not like a massive amount of new highs against, a big move against all these, intermittent new highs. I think it just sets up well for further gains here, but nothing that just goes parabolic like we saw in the fourth quarter of last year. I think it's just going to be a nice steady grind higher.
You mentioned the presidential race, and certainly getting attention on Wall Street this week was DJT, Donald J. Trump, the merger of his social media platform with Digital World Acquisition, that SPAC, shares of Trump Media and Technology Group, DJT, started trading under the ticker symbol DJT this past week, and moved up, had a big splash there on Wall Street. What are your thoughts on that one?
I'm avoiding that, Frank. I know it's a lot of people want to. He runs the Truth social media here, and that's all well and good. I think there was a big short position in this coming in, so there's a part of this is a big short squeeze, and I think it's a headline type of a stock here. It went from literally $40 to $80 here in a matter of just a few days. So it's backed off here to 62 as of yesterday. I think you watch it. It's entertainment, but there's way more other things to do that have what I would consider to be a more defined, fundamental future than doing this. This is a bit of a meme stock type of a trade at this point in time, and it brings back memories of the GameStop stuff from a couple years ago.
The Reddit rally, and speaking of that, we had Reddit. Reddit had its IPO. What about Reddit now actually trading on Wall Street?
Well, you have it's still a very popular site. I mean, for as many times as that website's gone down, it's amazing how strong that is, and Robinhood as well too. But Reddit's it's okay. I mean, from the standpoint of looking for something new and different, and the millennials love it. So I'm okay with it. From the it came out hot and it stayed up, and it's been a good name during the course, and it still could add to it. So it's more of a it's a high risk trade, but it's something that people can if they want to get after something that's new, where maybe some fund managers like the Kathy Woods of the world start stepping into it. They came out really hot. It ran up to 75. It's pulled all the way back to 50 here. This looks like a little bit, and it's just, so it's still well above its IPO price. I think it was around 37. But on this pullback here from 75 to 50, it's not bad to take a stab at it if you want to be in something fresh and new, because you just never know. Look at Coinbase. That went from 120 to 265. These are new stocks that if they catch up, and if they really put up earnings of any kind, then the stock can really move higher here.
Yeah.
But it's in the
Let
early
me ask
days.
you this about GE, the old school GE as being they're having the power generation unit being spin off GE Vernova. This is going to be trading next week, right? Starting next week under the ticker symbol GEV. What do we need to know about good old GE and this new spin-off Vernova that we'll be seeing next week?
Well, GE's been one of the big winners of the year. It's moved up, from 120 to 180 here. So I think it's, the sum of the parts is greater than the whole. I think it's not a bad idea if people want to be in a good industrial that's getting it right, from one division to the next. Certainly GE, I think it's up for sure, but there's room for it to run further, especially if you own the spinoff as well. And I think that's going to be. I like these spinoffs. J&J is doing the same thing here with their Jensen unit later this year. These have usually worked out pretty well, Frank, and if history has a chance to repeat itself here, and this is such a high quality name that I think people can, and the industrials are starting to take more of a leadership role in the market here. So, you want to go with where the momentum here is, and GE has a lot of mojo here. So it's okay to buy in front of the split off and then get the new stub that's coming off of it.
All right. Well, we still have a few moments here as we head into the second quarter here. The second quarter kicking off on Monday, April 1st. Where are you putting money now and/or taking it off the table?
Well, I think finally that the Russell 2000 here is just starting to break out. It's been a long time coming. It's well off of its old previous highs, but as of yesterday, IWM, which is the iShares for the Russell 2000, they hit a new 52-week high, and this is significant because it's been on one of those areas where people are not invested in the Russell 2000 here. So it's not a crowded trade. It's one that could really start to work its way considerably higher here off of this, especially because if rates are coming down, small caps are moving up, and that's just they tend to outperform. Now, for those that want to stay in the in the Nifty 50 and the big names here, certainly IBM pulled back here from almost 200 here to 190. We had a lot of consolidation here in the big names this week, so this is a good time to start picking up your favorite big cap, mega cap tech names here coming into earnings, which will probably be pretty good. Dell Technologies, DELL, nice pullback here. Let's look at that. I've been buying Salesforce here on this pullback from nearly 320 back down to 301, okay, as of yesterday. Looks good here. Technically looks great. CrowdStrike, CRWD, CyberArk, CYBR, both are best-in-class cybersecurity stocks that have both consolidated here for the past month and look very well set up to move higher. In logistics here, certainly in AI, Samsara here, IoTs, like Internet of Things. They're the number one AI play in logistics out there and growing very, very 35 to 50% top line growth here. And the stock ran up to 40. It's pulled back here at around 36, 37 here. I think, again, we're buying the dips on stocks that are in positive uptrends. And for those in fixed income, they're looking for dividends and yield here. Yeah, it's a good time to start locking it in here. Those that want to buy investment grade corporate bonds and put some time in there so you can have some duration. Bravo, Sierra, Charlie, X-Ray, BSCX here. That's the bullet shares. Pays 5.2%. You're getting a monthly payment here, and it's like buying. You're starting to lock in yield here because those short-term money market rates and T-bill rates are going to vanish here between now and this time next year. They're going to be about half of what they are. Utilities were the strongest sector of the week, Frank. The real breakout. Nice for utilities here, up 2.5% on the week. UTG is the Reeves Utility Income Fund. The symbol is Uncle Tango George, okay, UTG. And it pays 8.5%. It's a monthly payer. Got about 10 or 15% leverage in there. But, utilities are starting to come off the mat. And this is a great way to, again, lock in yield here and be in a highly sensitive sector here, because when rates come down, utilities tend to really outperform. For those that want to be even more juice on their money, then look at the BlackRock High Yield Corporate Bond Fund here, HYT, paying 9.75. Again, we're buying non-investment grade paper here. But again, the credit markets are firming up. When rates come down, the junk bond market tends to really rip higher. And coming off, you got to look at, cocoa prices here are up to $10,000 a ton. That's a 250% year-over-year increase in the price of cocoa. So that's going to really weigh on stocks like Hershey, Mondelez, MDLZ, and Nestle, NSRGY, the biggest chocolate makers in the world here. So those are in a void for the time being. Definitely looking at, Apple here this is going to be controversial, but Apple here is at a point here, an inflection point at $171. If the stock breaks 170 on volume here, you got to be careful here not to be in this name here, at least without some serious sell discipline. The DOJ is coming after them, for anti-competitive practices. They abandoned their AI strategy. They abandoned their autonomous driving, programs here. And the chart has the 20-day and the 50-day moving down through the 200-day moving average. That's called a death cross in the world of charting. So, Apple, as big as important as all is, they may be entering their own, the lost decade here if this continues to weigh on it. All these factors here.
Isn't that something? Well, Brian, thanks for that thorough assessment. As always, you're terrific. I could talk to you for hours. I wish we had more time. Investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, and the author of the 25% Cash Machine. We wish you a great holiday weekend, Brian, and thank you very much for taking the call here this afternoon.
Always a pleasure, Frank. Thanks so much. Have a great weekend.
You too. Thank you very much. And right out to the freeways now, 790 KBC. Friends, people like you and me have our ear to the ground on all things business. We love it. We like to be informed and well prepared. As important as finance is, I want you to have a plan in case you are hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that is not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. 790 KBC welcomes Matt Frazier, America's top psychic medium, coming to United Theater on Broadway, June 26. Tickets on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show. If you're caller 9, call now, 1-888-790-5222. Mottek On Money continues on 790 KBC. The financial markets closed today for the Easter holiday weekend, but the crypto world never sleeps. We see Bitcoin right now up about $200, back to $69,877. Ethereum up 22 at $35.19. Doge is up there now at 21 cents. And now the latest news for you here on 790 KBC. Mottek On Money continues here in 790 KBC, streaming live worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Turning now to taxes. The tax man wants your money. New calls for the repeal of the so-called Inflation Reduction Act. It turns out the Biden administration estimates now show that the government could spend more than $1.8 trillion over the next 10 years on energy tax subsidies if they are made permanent. The Inflation Reduction Act of 2022 marked a significant shift in energy policy to one that pairs costly and complicated regulatory requirements with open-ended tax subsidies to manipulate consumers and producer incentives towards politically popular energy sources. So says Adam Michel, tax policy director of the Cato Institute, who just wrote a big op-ed article on that subject. Adam Michel joins us live here now. Good afternoon to you, Adam.
Thanks for having me on.
You are the tax man. You are Director of Tax Policy Studies at the Cato Institute, where you focus on analyzing the economic and budgetary effects of taxation in the U.S., a great taxpayer advocate. Take it from the top and tell us what we need to know about this so-called Inflation Reduction Act, which some call the Inflation Increase Act.
Yeah, well, that's, I think, a more accurate way of describing it. The Inflation Reduction Act was passed in 2022 and was claimed at the time to be not add anything to the deficit. I think it is now clear after a series of revisions of the cost of all of the green energy provisions in that bill that it will dramatically add to the deficit and is projected to do so for likely the indefinite future. The original cost of a lot of these tax credits for everything from EVs to special types of energy production to carbon capture were projected initially to cost about $270 billion over 10 years. The most recent estimates have inflated those numbers to well over $1 trillion, likely $1.8 trillion, making the sort of pledge of inflation reduction fanciful, but pointing to a broader change in energy policy in the United States, one that is heavily reliant on policy from Washington manipulating people's incentives towards politically favored energy sources.
That is really something. So a bait and switch here with what you just described there. So this the cost of this could be 2 or 3 times larger than initially projected. So now new calls for the repeal of this so-called Inflation Reduction Act. Who's calling for this, and what are the chances that this will be thrown out?
Yeah, so as the cost just continues to go up, and a lot of these credits are open-ended, so they actually have no. If the more people use them, the more they cost. There's no real cap on how much these things could cost in the future. The Republicans have talked about trying to repeal parts of these credits. There's a big tax cliff at the end of 2025 where these credits, there'll be another opportunity to repeal a lot of them. But unfortunately, the politics are really difficult. Even Republicans are seeing some of these tax subsidies flow to their congressional districts and their states. And so it's a case study in how difficult it is to rein back in big and expansive government once it's put into place, once people sort of start getting a taste of these subsidies from Washington. And so now is the time to capitalize on these new estimates. And I think it should renew people's enthusiasm to repeal this thing, considering we're projected to have multi-trillion-dollar deficits basically every year out into the future.
Isn't that something? We're used to this here in California, how these bills or acts are named, and often very deceptively. This was called the Inflation Reduction Act, and it seems to be just the opposite.
It is just the opposite. And if you listen to a lot of the rhetoric from Democrats, President Biden in his State of the Union address has had multiple lines about wanting to raise taxes on corporations and repeal subsidies for big pharma and big oil and whatnot. But really, what these $1+ trillion of tax subsidies are their tax cuts for large corporations in big solar and big wind and sort of you name it. And so the rhetoric is we need to raise taxes on big corporations, we need to raise taxes on the rich, and they're saying that with one hand, but with the other hand, they're giving away trillions of dollars in subsidies to these same people they demagogue for not paying any taxes, which is often the product of these laws that they also champion. So there's a really big sort of cognitive dissonance in how this policy is being constructed as well.
Well, I encourage everyone to read your article. Google Adam Michel, that is Michel, Adam Michel, Tax Policy Director at the Cato Institute, who just wrote the big op-ed article on this so-called Inflation Reduction Act and new calls for the repeal of that act now based on what we just talked about. Adam, great to connect with you here. Thank you very much for taking the call here this afternoon.
Thanks for having me on.
Right out to the freeways we go now, 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. Fast food workers now losing their jobs here in California as a new minimum wage law is set to take effect on Monday, April 1st. No April Fool's joke on this one. Already Pizza Hut and Round Table Pizza have announced big job cuts ahead of that state minimum wage going up to $20 an hour on April 1st. Let's bring in the awesome Angela Marsden now, owner of Pineapple Hill Saloon and Grill in Sherman Oaks, restaurateur and small business champion extraordinaire who got national and even international attention during the pandemic days when a restaurant was shut down next to a movie shoot catering operation that was allowed to remain open in a nearby parking lot. And Angela, thank you very much for coming to the line here this afternoon.
Hi, Frank. Thanks for having me. How are you doing?
All right, thank you. Looking forward to hearing you tell it like it is, and give us your reaction to what's happening in the restaurant business here.
It's D-Day, as if I haven't been screaming this for a long time. But the $20 an hour minimum wage, it affects everybody. And it most importantly affects the small mom and pop restaurants and small mom and pop businesses. This, again, is the great Gavin Newsom doing his little eggshell trick, like at a carnival. You know when they're doing the little trick and you're watching the shells to see where the money or the little white thing went? Meantime, they've got somebody else stealing every penny out of your pocket. Basically, we're going to see tons of jobs gone. We are going to see massive layoffs. I promise you, your favorite restaurant will be strapped, be closing the kitchen, if not closing altogether. I talked to my restaurant friends, and everybody is 2-3 months away from calling it quits. I have a girlfriend in Silver Lake, has an amazing bar for 18 years, Frank, and she literally is looking for a job because she can't pay herself. That's how hard it is on her. I don't know if I'll be here by the end of the year. Between the minimum wage and the freaking insurance, the insurance is a whole nother issue. It's a whole nother segment. But I want people to be very clear about this. And if you're in your car, I hope you start educating your kids and you start educating everybody around you. Gavin Newsom is tanking California. Gavin Newsom does not care about your son's future, your daughter's future. He smiles and acts as though, oh, I'm going to give you more money. He knows dang well that there are small businesses that are going to go under. The big corporations are going to cut the jobs, and they're going to replace people with AI. We've talked about this, Frank. I believe he's trying to do the new AI revolution. He knows in 5 to 6 years, half the employees in the fast food corporate world are going to be replaced, if not eliminated. And what about the poor franchisees owners, Frank? What about the woman I read who owns McDonald's, 7 of them, her and her sister, and now she has to close 4 of them? The franchisees owners are mom and pop. They pay a franchisee fee so they can have an opportunity to make a living at something that is a great success like McDonald's. And they basically are losing their shops. People need to wake up. It is the great Gavin Newsom scam. He basically has passed on a brutal tax to the public. He is, because I have to raise my hamburger, right? Reddit's hamburgers, a Reddit hamburger or Five Guys hamburger on Reddit was $24.99. My bread comes from a local bakery. I have, good meat. I've got to pay my staff. You're going to pay $26 for a hamburger? They basically it's rich and poor now. He's not only eliminated the lower middle class, the middle class, but he's eliminating the upper middle class. It's beyond comprehension, Frank, and nobody can be this stupid. I like to think that our politicians are so greedy and dumb that they don't get it, but at this point, they cannot be this dumb. That is not possible. So they know something we don't know. There is something going on, and to me, it's just like if you're going to a carnival, and Gavin's there all in his nice suit, smiling at you, telling you all the prizes you're going to win, and meantime, he's robbing you from behind. That's what's going on. And I don't know when L.A. or when Californians are going to wake up and get this man out of office, but we are headed for some really rough times. We just had the entertainment strike, and we have the video game industry going down. We have massive tech layoffs. Now we have fast food workers losing their jobs completely and being laid off. You go to McDonald's, and the poor single mom, I was a single mom in L.A. I raised my son in L.A. A lot of single parents that don't make a lot of money, they go to McDonald's because it's cheap, it's fast, it's affordable, and it's an experience for their kid. They cannot afford $20 a kid. They can't afford it. So I am afraid for the next year. It's going to be just like I told Mayor Bass last year. I told Mayor Bass last year, you need to freeze the sales tax. You need to freeze the minimum wage. You need to give a reprieve to the small businesses. And she didn't listen. And, of course, we had, L.A. Times, 2023, the year restaurants went to die. My bartender's favorite restaurant, Italian restaurant, Mom and Pop, had to fire the kitchen staff. The husband was cooking. The wife was working up front, and they didn't make it. They closed. And you are going to see this, LA. You're going to start seeing this all year long with your favorite shops. My other girlfriend's favorite crystal shop had to close. The minimum wage directly affects us. I had a cook come to me looking for a job, Frank. I said, I'm not hiring right now, but I know people that might be. What are you expecting to get paid? What do you think he said, Frank? He wanted $25 to $26 an hour to cook. Now, guess what? He has to cook steak and he has to cook real food in my kitchen. So, of course, that would make sense if you can get $20 an hour dropping fries. But in the long game, nobody has a job. Nobody wins. Nobody has any money. This is devastating. And it's all because these politicians, they are not doing their job. They go and they do whatever it takes to get the votes. They do not do the work. They chase out the bigger businesses that were paying most of the taxes. They are gone. If they have money, they don't care about California. They leave. And now what's left are the small mom and pop businesses and the 3-owner shop businesses, and they're trying to squeeze all the money they need out of us while promising the fairy tale land that money grows on trees and these people can just pay it. And what I want to ask people is, do the business owners, the small business owners, we supply more than half the jobs. When we are gone, what are you going to do? And by the way, do not, the owners who take the risk and take the liability, are we not human beings? Do we not deserve a quality of life for the investment and the risk that we take? I make less than $70,000 a year, and I may be out of business by the end of the year. I am on low income standards in LA. Some of the places I talk to don't even take salaries as owners. They're trying to weather through this and work a job to keep their employees employed. And we are doing this to keep our employees employed. You do not do something like this and get nothing if you do not care, if you do not have memories in that place, if you do not have memories in your community, if you do not care about those employees. I got 15 people have their jobs on their line at my place. That's just my place. Think about the woman who's closing 4 McDonald's. Where are those people going to find work? Because nobody's going to be hiring, let me tell you.
Angela, we'll have to stop there, but thanks for laying it on thick and telling it like it is. As always, it's heartbreaking to hear that you're struggling there, and we want to support you, so everyone should get over there to the Pineapple Hill Saloon and Grill in Sherman Oaks and support you, Angela Marsden, first and foremost, and thank you very much for speaking up for small businesses here in the Los Angeles area. And what's really heartbreaking, it looks like only the mom-and-pop family-owned restaurants here will be paying the $20 per hour minimum wage because of this latest bill that was signed into law, exempting fast food restaurants located in places which basically could most afford the $20 minimum wage increase. So, Angela, thank you again for joining us live here. This is Mottek On Money on 790 KABC.
Hey everybody, this is Dan Bespris, host of Fantasy NBA Today, a daily fantasy basketball podcast. We cover every box score from every game, every day. Plus bonus shows on buy low opportunities, players to stash, schedule analysis, and really anything you could need to smash your league into deliciously tiny pieces.
Catch the Fantasy NBA Today podcast, part of the Believe Network, on YouTube or wherever you listen.